Hi guys, welcome back to our weekly trading forecast for the week of 5th of October to 9th of October. So my name is Dylan, and over here I have JJ with me. So we're gonna start off with the dollar index. Let me just share my screen. All right. So last week, the market is pretty much in a very ranging manner. I mean, there's a lot of things that's happening. Last week, we have the presidential debates, and soon after that, it was reported that Trump uh, contracted the coronavirus. Right now, it seems that he's recovering, but a lot of details is not being reported as well. So, and this week going forward, what we have, one of the most important one is, of course, FOMC meeting minutes on Thursday at 2 a.m. We have ECB president speaking as well on Tuesday, 4:35, and of course 9 p.m. itself. And on the day itself, Powell will be speaking as well. And Tuesday, earliest, where important data is going to be released is the Australia cash rate and the rate and RBA rate statement. So today we are going to expect the market to be pretty quiet. So anyway, let's come back to the chart for now. So if we look at the dollar index in the daily charts, so last week we saw that the dollar index, after a minor break out of this, falling channel, a falling channel that's lasted for 6 to 7 months so far, it came down, it pulls back a little bit more than what we have expected, but nothing unusual. In fact, right now it is sitting at a previous high, previous resistance and support level at 93.7. So at the same time, we're also seeing the support at the bottom of this rising channel as well. So going forward, I think due to the uncertainty of the U.S. election, we had the ongoing Brexit trade deal as well. There's a lot of uncertainty right now. Of course, the coronavirus as well. So most likely in this scenario, dollar will still continue to strengthen on the safe haven demand. So right now, the support that we're seeing right here, maybe there might be a little bit of breach of it, or maybe it will come back down and find support at the previous low, retest the low right here. But anyway, obviously, this is the demand zone. So as long as the dollar is able to get supported going forward, then we will definitely see the dollar index continue to strengthen in the days to come. So let's say if it continues to strengthen and broke out of this channel, the next most important level will be somewhere at 95, between 95 to 96. So that will be the next strong supply zone that we have to look out for when the dollar starts to strengthen again. Next, let's talk about the euro against US dollar. So euro against US dollar, always very similar to the dollar. In this case, euro dollar has already broke out of this falling channel a couple of weeks ago. It came all the way down from a new falling channel. And right now we are seeing resistance at the top of this channel, and as well as the previous supported resistance level at around 1 point, just slightly below 1.18. So going to the small time frame, the 4-hourly charts, obviously we have a little bit of range right here. So whenever the price pulls back, all right, based on price action, okay, we want to see some resistance at the top right here. If we were to pull out a zone right here, I think this will do the job. So it is between 1.1747 to 1.1777, range of 30 pips. So right here we can just continue to look for selling opportunity, but this definitely looks something like a head and shoulder, right? So that's something you can also consider. right? I think this, this will give us a very good reason to definitely attempt to sell the euro against US dollar as it reaches 1.75 and into this supply zone at the top of this falling channel right here. Target wise, all the way down, definitely back to the previous low, 1.1620. If it breaks lower, it will meet with the 100 MA in the daily time frame. But going even lower, you'll come back to this very important resistance previously, at the price of 1.1455. So that will be the final level if we are very bearish on the euro against US dollar. All right, so that's for euro against US dollar. And next, I want to pass my time over to JJ to share his trading plan for the week. So JJ.
Okay, first we have this dollar CAD. As we can see, after price broke out of this since March to about 6 month long downward trend line, it broke above this key level of interest, but price started coming down. And as we can see on the smaller time frame, it got resisted here for somewhat consolidated and broke downwards. And as of now, it has finished one wave of retracement. So the price I'm actually looking at is this previous level of ranging, where if price would form another wave, I think that it would just nice enter this level of previous resistance and support. And if we can see signs of support here, I believe we can continue buying dollar CAD at about around 322 to 324, I would say. And next we have pound dollar. So similarly, it has broken downwards. So this was the first trend line that it broke, and after it broke downwards, it came back up, retested, and continued its downtrend until it got supported by this next trend line we have over here. And you can see on the smaller time frame that it is somewhat ranging, but price has not really seen much resistance. So this a way we can see that there is actually this trend line being formed. And as price is slowly going up, it's actually reaching this level of interest, which is actually, we can see that every time price was like around this level, there is always some support. And right here, when price broke below this level, it came back up and got resisted. And similarly for this level as well. So with that, I believe that this is actually quite a good supply zone for to sell pound dollar again. So if price continues being supported by this trend line and reaches this level of interest, this area I think is where we could look to sell pound dollar again. So this would be my two analysis for this week.
All right, thanks JJ. Yeah, pound wise, I mean, just on the fundamental level, with the Brexit deal ongoing and mostly uncertainty, and probably they might even reach a no deal Brexit. In any case, definitely I would expect the pound to recover back to the pre-Brexit level. So based on the range that we have right now in the weekly charts, is already trading at a higher portion of the range. So I think looking to sell the pound is fundamentally reasonable. And of course, during this period of time where the dollar is most likely going to strengthen, definitely is a good time to continue to sell the pound against US dollar. All right, so I will come back to my screen right now. And next, we're going to talk about the gold. So for the gold, right, we know that ever since it reaches the highest, somewhere at 2070 historical high, and that was in August, early August, and it has already pulled back ever since. What the first thing got to take note is that it has already broke below this riding channel, all right, for since the past couple of weeks. And right now, we are seeing the dollar, the gold, it has found some support at 1,850, rebounded off, but yet it started to face another strong resistance, which is supposedly a previous support and resistance, or rather, it was actually the previous 9-year high. All right. So in the 4-hourly chart right now, what happened this morning is that the gold actually broke below this rising trend line, as you can see, when the gold price is actually trying to range upwards, but then it broke below this trend line. So price action wise is definitely showing is starting to think move towards a bearish markets in this case, and we might still expect that the gold to pull back even further and retest the low as the dollar continue to strengthen, and gold might still be considered a little overpriced, or in fact a bit too expensive for investor to actually go in at this point of time. So with all of this combined, long-term wise, yes, definitely, I'll definitely still want to buy the gold. But I think for the short-term movement, we can start to look to sell the gold since there's already a breakout right here. Maybe just wait for some form of pullback, back to this supply zone that we can see right here in the 4-hourly charts. So that will be the price of somewhere around 1,900. And other than that, it's pretty straightforward. So you can try to sell it right here, or you can just patiently wait for it to retest the high right here. Or otherwise, in fact, in the daily charts, daily time frame, we already seen that the price has been resisted by this falling trend line. So recently, the same thing happened, which is why we are bearish on the gold, short to midterm wise. Target, we will definitely first look at this level, because this is where the gold actually formed somewhat of a double bottom, and it broke out this net line at this level, 1874. So that's the first level we want to look, we want to watch out for, the first targets, and eventually back to the previous low. But if it's able to continue downwards, then most importantly, we are looking at this demand zone right here, 1,800. As I have actually labeled out here, was a very strong resistance previously. If we were to look at the weekly time frame, back in year 2011, 2012, and this is where once price broke out of it, and a bull rush started, and which caused it to break a new historical high. So this is the most important demand zone for the gold. All right, so that's for the gold. Last but not least, the US30. So US30 wise, I know due to the tech sell-off and stuff, the US stock market has already pulled back, came down quite significantly. But recently, couple of weeks again, it has already broke out of this falling channel. So price action wise, we can see that after it broke out, pulls back because supported, and goes out even further. So right now it's just trading within this range. But in any case, if you look at the daily chart right here, definitely it is still supported very well, okay, by the moving averages. If you were to pull out some trend lines, it's still being supported. Completed 2 wave of a pullback. So right now there isn't any sign of a reversal, or for the price to resume falling again. So in this case, I think for now, I will take a more bullish stance, which means to say, if right now we can see the price has already from the first bullish wave right here, it then went into a range. So I think in this range itself, we just want to wait for it to come back down here again. So right here is kind of forming something like a symmetrical, or what we call a flag, a bullish flag. So just wait for the price to pull back, okay, back to somewhere near the bottom of this range. So that would be 27,005 to 400. And then we can try to buy the US30 again. First level to look out for is definitely this strong resistance right here, 28,140 or 28,200. And all the way back to the previous high, 2019, 29,000. That won't be a surprise. All right. But just watch out for the FOMC meeting minutes in the coming Thursday, because what's going to affect the US stock market in the short term wise is definitely we are also looking at the stimulus package, right, by the government, because right now it is still not approved. If that does approve, then definitely that will help to support the US stock markets. So which is most likely there might be a deal for it. So which is why I'm still going to be slightly more bullish on the Dow Jones. All right, so that's it for now. Last but not least, maybe I would like to share is the Kiwi against the US dollar. So Kiwi against US dollar, firstly in the weekly chart, okay, the first thing you need to know is that there's a really strong resistance right here at 0.6770. So price has already came down, and all the way into daily time frame, we've seen that the price has tested this level twice, came all the way down, found support right here, but right now it's just pulling back. So in the midst of the pullback, there's already 3 waves completed right here, and price came back, got resisted at the previous high right here, which might cause it to form a double top, which is why technically I'm actually looking to sell the Kiwi dollar right now. And also fundamentally, if you were to follow what's being said in the previous RBNZ rate statement, there's a very high chance that the Reserve Bank of New Zealand may cut interest rate again. So which is why I bet on selling the Kiwi against US dollar with the strong technical resistance we have right now. All right, so that's the last piece I want to share with you guys. JJ, do you have anything else you want to share?
Nope, that's all for me.
All right, thank you so much. So that's all for our weekly trading forecast today. So thank you so much for watching. Wish you good luck for this trading week, and watch out for FOMC, of course. And risk management is always the most important thing. Thank you so much. We'll see you again next week.